this is Raman Gill. Welcome to episode 78 of the 10,000 Trade Show, where we are mastering trading and creating excellence through the deliberate practice and analysis of 10,000 trades. In this episode, we will take a look at 1, 2, 3 chart pattern. This is a reversal pattern, and we'll see how the trade sets up based on this pattern, where to enter the trade and where to look for an exit based on this. Let's go on to the charts now. We are looking at a 1, 2, 3 reversal trade setup today. This is a reversal trade setup, so we're looking for trend to come to an end, and we're looking for a reversal in our trade or in the pair that we are trading. This is Euro Yen 1 hour chart. So in this case, as we can see, price has been going lower for the last couple of days. Here price was moving down, and then we see this big push to the downside. Looks like some stops got run, and we have this big pin bar, and then price starts to pull up. So number one would be our lowest low, or if we are looking for a short trade, then will be the highest high. So in this case, we're looking for a long trade because we're looking to go against the trend, and the trend was to the downside. So in this case, this will be trading to the upside, so bullish move here. So the one would be at the very bottom, the lowest low, and then we look for a pullback, and number two is where the high is, and then 3 is the lower or the higher low. So in this case, we have a low point, then price moves up, makes a high, pulls back down, and gives us number 3, which is higher low. So in this case, once this is formed, we are looking for price to close above number 2 here. So we draw our support and resistance line here. We look for price to close above this level. In this case, price does close above this high in this case here as well, but I do not like these pins. So I would not trade this candle close. And so we just wait for price to do whatever it's going to do. In this case, it could have pulled lower, in which case our setup would have been invalid and we would not have entered the trade. However, in this case, price goes and closes above this number 2 level once again, and we get this nice engulfing, bullish engulfing candle. It takes out this previous candle. Nice close on this, so we can enter our trade here. If you want it to be a little bit more conservative, you can wait for this bullish engulfing candle close. However, this one here closes above the previous high, so I am happy with that. So we take the entry here, and then we stay with our trade. So in this case, we are basically looking for price to make higher lows, and as price keeps moving up, we watch for those higher lows. So this higher low here needs to be higher than previous one. The next one, this one here, needs to be higher than this one, and then next one is higher than this one. And then as we can see, price turns, and our next low is lower than the previous low. This is a signal for us to exit the trade because now our trend is broken. So if you remember the definition of a trending move, we are making higher lows or lower highs. So in this case, we were looking for lower highs because price is moving up. We are looking for price to move up. Once that breaks, once our trend line breaks here, price closes below that, we get a lower low that breaks our trend here, and we exit the trade. So from entry to exit here, we get 150 pips in the trade, or $1,500 if we are trading one standard lot. So just to recap here, we are looking for a 1, 2, 3 reversal trade setup, in which case we are looking to go in the opposite direction of the trend. So here we have price trending down, and then we get long wick to the downside. Generally this points to a running of some stops, and normally price starts to go in the opposite direction after that. So we don't take our trade just here. We look for price to make a high and then a higher low, which is our number 3, and we are looking for price to close above number 2 here. Once price closes above number 2, we get a long entry, we enter the trade, and then as long as price is making higher lows, we stay with the trade. The very first low that we get, which is lower than the previous low, that's our cue to exit the trade. So from entry to exit here, it's 150 pips in the trade or $1,500 if trading one standard lot. If you'd like to learn more profitable Forex trading strategies like this one, I invite you to visit my course at tradingwithvenus.com/Forex course. In the course, I will show you how to read the candlesticks and different chart patterns. We'll do a deep dive into technical analysis, and I will show you how to read the charts properly, what trade setups you're looking for, and how do we trade these setups properly. I will also show you what are the important fundamental things that you need to pay attention to, how the different fundamental factors drive market price. I will also share with you the trading strategies that I personally use that I have found to be the most profitable. We'll also talk about trade management and how to manage your account and manage your risk so that you become a profitable trader. I will also show you tons of examples that you can go and check out so that you are able to see these trades set up in the live markets as well. As a bonus, you will get access to my pivot point indicator. If you have watched any of my videos, you know I really love trading the pivot points, so you will receive that as a special bonus. The price of the course is $497. To sign up for it, please go to tradingwithvenus.com/Forex course. Thank you so much for joining me today. I hope you enjoyed this trade setup. If you like this episode, please like, comment, and subscribe below. As always, it was a pleasure sharing these trades with you, and I will see you on the next episode.